as I may consume.
Gentleman is recognized.
Mr. Speaker, I rise in very strong support of H.R. 4263, the Reg A Plus Improvement Act. And I want to thank the sponsor of this bipartisan legislation, the gentleman from New Jersey, Mr. MacArthur. He has been a huge leader on all capital formation issues within our committee and in this Congress. He is a real asset. His business acumen is well positioned to help serve us, and his leadership on this bill should be commended. Although small companies, Mr. Speaker, are at the forefront of technological innovation and job creation, they often face significant obstacles in obtaining funding in our capital markets. These obstacles generally stem from the disproportionately larger burden that securities regulations, written principally for large public companies, instead place on small companies when they seek to go public. In 2012, the Jumpstart Our Business Startups Act, known as the Jobs Act, sought to modernize and better tailor some of these regulations, including Reg A under our securities law. Reg A is a long-standing exemption from SEC registration that permits public offerings without formal registration as long as certain conditions are met. Prior to the Jobs Act, a small company seeking to use Reg A was limited to raising $5 million of securities in a 12-month period. As you can imagine, over time, Mr. Speaker, Reg A offerings became increasingly rare due to the relatively small offering size that was available and a requirement that Reg A securities still comply with 50 different state securities law registration and qualification requirements. Title IV of the Jobs Act attempted to address the antiquated Regulation A by directing the SEC to update it, which the SEC did in 2015 under the moniker Reg A Plus by creating two tiers of Regulation A offerings and allowing certain securities to qualify from preemption from state securities law. Under the second tier, the SEC increased the amount companies can offer from $5 million to $50 million. Mr. MacArthur's legislation only pertains to the Tier 2 limit. Since Reg A Plus was implemented in 2015, small businesses have increasingly been able to use this tool to raise much-needed capital to expand their businesses and create new jobs in our economy. According to the SEC Office of Small Business Policy, as of November 2017, 69 completed Reg A Plus offerings had raised a total of $611 million. Unfortunately, the $50 million cap leaves significant opportunity on the table for our startups, opportunity that could be better realized if the limit was increased to $75 million, which the Treasury Department has recommended as a potentially less costly alternative for startups to raise capital. Moreover, increasing the Reg A Plus limit will better position companies that want to use the exemption as an on-ramp to list publicly or bear the corresponding compliance burdens and still invest in jobs and growth. Mr. Speaker, more and more, we have seen IPOs of companies with products that we use every day: Uber, Facebook, Spotify, Snapchat. These IPOs come after the company is valued over $1 billion. For everyday investors, this often means missing out on some of the most dynamic growth stages of a company that would provide the highest rate of returns for them and their family, all while the wealthy accredited investors and venture capital firms can invest early and they get to rake in the better rates of return. With regulations disproportionately stacked against them, it isn't surprising that small companies so often are choosing to stay private. Many have no other choice, again. After all, the SEC has estimated that the cost of going public on average are $2.5 million in regulatory cost for undergoing an IPO, and annual compliance cost averaging $1.5 million thereafter. Those costs stand in stark contrast to the $111,000 the SEC says is the average legal and auditing cost for Reg A Plus offerings. In other words, by utilizing Reg A Plus, small businesses can raise significant capital while saving more than $2 million. $2 million that can be invested in jobs and research and other growth opportunities. This is why Reg A Plus is so important. It provides a more cost-effective way to raise equity capital early on growth stages of these companies. Additionally, Reg A offerings enjoy preemption from state securities laws. Mr. Speaker, I hope every member pays close attention to this. They may not know it. In 1980, when a startup computer company, by the way, called Apple, decided to go public, Massachusetts, the Commonwealth of Massachusetts, decided the stock was too risky and barred its sale to individual investors in the state. Today, Apple's market valuation is almost $1 trillion. It is an American iconic brand and one of the largest companies in the world. And it is, again, potentially going to be the first public company with $1 trillion market cap. If you had bought 45 shares of Apple when it was offered at its IPO, by the end of last year, you would have over $394,000. That's hardly crumbs, Mr. Speaker. In short, I strongly urge my colleagues to support this legislation. It's a very smart but modest improvement in the Popular Jobs Act provision, and I reserve the balance of my time.
Gentleman